Check the mic and make sure it sound right, boys.
In this video, I wanted to show you how you can increase your risk reward on almost any advanced pattern formation. So here we have a Gartley pattern. We're on New Zealand CAD, looking at this Gartley, this out of the way. And we have what I would call a shallow Gartley because we know that the decompletion point is based on an extension from A to B at this 127. So we have a decompletion right here, and it's very shallow because the Gartley requirement has to touch at least the 618 retracement from X to A. So this B point barely meets the requirement. If we had retraced a little bit higher, say it's valid up to the 786 up to here, we'd have a better completion, but it's very shallow. So we have a shallow Gartley, which is going to give us a poor risk reward. So this is our traditional completion right here at D. So we have our entry, and then three things we need in a trade before we take a trade is entries, which we have here, stops, and targets. So let's say you're doing a 113 inversion. So we would have our stop here, and our traditional targets are A to D retracement. So that's going to give us traditional target 1 at the 382 retracement, traditional target 2 at the 618. We bust out our handy dandy little risk reward tool, measure this out. You're going to get a 0.88 risk reward, which is inverted, meaning you're risking more than you're going to win if you do win. A lot of people don't like that. They want at least a 1-to-1. Some people want a 2-to-1. So say you want a 1-to-1. What are some things we can change to get a better risk reward? A lot of people think, oh, I can short on my stops. That'll give you a better risk reward. So you can shorten your stops, but the problem with that is we have our stop here for a reason. So we don't want to change that. So say we leave that, and the other thing we can change on our list is our targets. So say you want to go shoot for a 618 instead of 382. That'll give us a 1-4 risk reward, but we have our targets where they are for a reason. So say if we don't want to change our stops, we don't want to change our targets, what's the last thing we can change? And that's our entry point. So on a Gartley pattern, this Gartley is technically valid anywhere from this D point to X. Anywhere in there is a valid completion point. So instead of this D completion point, now we have a completion zone where this Gartley is valid until it breaks this X leg. So we can enter anywhere in this zone and technically still be a valid Gartley pattern. So let's say we want to shoot for a 1-to-1 minimum, and instead of entering right here where the initial completion point is, say we pull it up a little bit right here. So now our hypothetical entry is here. Let's throw on our risk reward tool, keeping our stops because that's where they are on purpose. We adjust to where our new target is at the 382, which is still our original target, just drawn and dragged for price retracements. And now, since we entered a little bit higher in our valid completion zone, instead of a 0.88, we have a 113. So technically, if you wanted a 1-to-1, you could get a little bit lower and still get that 1-1, and you're still in this valid trading zone. So as with anything trading, there's pros and cons. The pro with this is you're going to get a better risk reward, and you can pick whatever that number is. Maybe it's a 1-to-1, maybe you want a 1.5 or a 2-to-1, so you're risking 10 to make 20. The con is if you say you want to enter here instead of here, sometimes the market will roll over at the initial completion point, hit targets, and you would get skunked out of that trade because you want to enter at a higher price. So there's a pro that you're going to get a best reward, and there's a con where you might miss out on some trades. And the only way you're going to figure out what's the best risk reward for yourself, how many trades are you willing to miss, you need to go through the charts and you need to backtest this. Don't just take my word for it. If you need something to backtest with, you can use the backtesting spreadsheet I use. It breaks it down, all your returns, your drawdowns by year. If you go into complete data, it'll break down your win rate. It'll show you your max drawdown, your returns, and all that cool stuff. And you can download that in the link below. So go out there, give it a try. Good luck and good trading.